Good day, ladies and gentlemen. I hope you're well. So this session we'll be talking about the structure of the cycle and if we are in a bear market or a bear winter or where we are in the cycle. It'll be based on things like TA, on-chain data, macro, liquidity data. There's no narratives, there's no emotional based conclusions. It's only what the indicators measure and what they have historically applied. So we'll be going through the charts and we'll be discussing macro things that are happening at the moment. We'll be checking the latest price of Bitcoin, looking at things like things like Bitcoin dominance, altcoin dominance, looking at moving averages, and looking at on-chain data as well. So just very quickly, the difference between on-chain data and off-chain data. On-chain indicators are built from data recorded on the blockchain. They measure what the network and the market are actually doing using numbers that come directly from the blockchain. It's hard data. It's not like headlines and noise, and it cannot be tampered with. So we'll be looking at on-chain indicators like the pi cycle. We'll be looking at the pi cycle bottom because we have spoken about the pi cycle top. It is the most accurate indicator of them all, but there is also a pi cycle bottom as well. We'll also be looking at the MVRVZ score, which again is an on-chain indicator that looks at the Bitcoin's market value compared to its realized value, and it will help us identify how much profit holders of Bitcoin are really in. We'll also be looking at a lot of off-chain data. We'll be looking at, so off-chain data is indicators and data that's not produced by the blockchain itself. They're external signals that are measured, where we can measure things like liquidity, demand, capital rotation. We'll be looking at the MACD, RSI, a little bit of Bitcoin dominance, market structure. We'll also be talking about macro as well. So just very quickly, hello, Bill. How are you?
Hi, I'm doing good. Thanks for having me on the show.
Okay, awesome. So just very quickly, I'll just go through and quickly do a market review. 1 second, 1 moment. Let me just share my screen. So here, what we have here is we have a Bitcoin chart, the Bitcoin chart, and we're going to put it on onto the daily. And here we see that we've got three lines actually. We've got the green line, which is the 50-day SMA. That's the average of the daily closes over the last 50 days. Now, this is a medium-term trend line, and it's useful for things like momentum and pullbacks, but it's not the main regime line. We've got the 200-day SMA, which is the red line. And this is the average of the last 200-day closes of the Bitcoin price. And this is the one that people use as the bull and bear regime filter. So if Bitcoin holds above the 200-day SMA, the market is generally considered as bullish and risk on. If it flows below the 200-day SMA, the market is generally considered to be bearish and risk off. We also have on here the, one moment, I've got one screen and that's it. So we also have on here, so this is the 50, can you see that? I hope you can. The 50-day SMA, the 200-day SMA, this is for the bull and bear market regime line. We have a death cross here. We have a death cross here. Hang on 1 second. Is this the 200-day? There we go. I do apologize. I've got something else up. There we go. So that's the 50-day SMA. This is the 200-day SMA. When they cross and the 200-day SMA goes above the 50-day SMA, we have a death cross, and that's a bearish signal. Now we're underneath the 200-day SMA, which means we are bearish. Down here, we've got the 200-week SMA. So this is pretty much what the price has been doing for the last 4 years. And this is a very accurate trend line, because we tend to go back to this trend line every time we're in a bear market. We tend to hit it or we go below it. So at the moment, it's trading at roughly 58,000 US dollars. If we go back in time and we go to the last bear market, this is how it plays out. So we have, obviously, we're coming down. We hit the 200-week SMA, which is the last 4 years of 4 years of data. We go underneath it, and here we're in a deep bear market, maybe even a bear winter. We stay below it, and then when we come up above it, we've turned bullish again. We stayed below it for most of 2023. If we go back even further, we will see here it is again. This is in 2018. So we've just come out of the 2017 bull run. And when we're in the dip of the bear market, we normally go back to this line, we touch upon it, and we bounce off it. Again, if we go back to 2015 now, if we go back to 2015, this is pretty much where it started. So we had the 2013 bull run. It actually went down to about 2015. Bearing in mind, this is when it started, because it is accumulated in the last 4 years. And before that, it didn't have the data. We slightly went below it. We bounced off it. So this is what I'm expecting. I am expecting the price to go back down to the 200-week SMA, which is here. So it's played out pretty well so far. So obviously the death cross happened in November. The all-time high was obviously the 6th of October 2025. If we have a look at the MACD, now obviously we're looking at bear market and bull market. Sorry, the bear market and the bull market. Where is the MACD? I need to get it back on. This is how I was able to call the start of the bear market back in November 2025, because this historically has been very, very accurate. So here we have, bearing in mind, we're zooming out now. We're on the monthly chart, which is very important because we are zooming out. It doesn't work on the daily or weekly. It works on the monthly. So on the monthly, we went bearish from the 1st of November 2025. The all-time high was in October. So in between October, you can see here, in between October and November, it turned bearish. If we go back a little bit more, we can see here in 2021 as well. November 2021 was the all-time high. In December 2021, between December and January, in the middle between there, it turned bearish. And that means obviously we went down into a bear market. And if we go back, it does do the same sort of thing. And then, yeah, so this is the MACD here. Put this back on the daily. So we've covered the moving averages. We've covered the 50, the 200-day moving average. We've covered the death cross. We've covered the 200-week moving average, SMA. We've covered the MACD. We can talk about Bitcoin's dominance as well, actually. Let's have a quick look at Bitcoin's dominance. So Bitcoin's dominance, and I've done this a couple of times. Take that off, take that off. There's no point looking at Bitcoin's dominance before 2015 or even before 2016. Ethereum was launched in 2015 and it started to take some of the share of Bitcoin's dominance, but nothing major happened until 2017, which was the bull run. Now, in 2017, we kind of went up and then we went parabolic. And this is exactly what it shows on the chart with Bitcoin dominance. We rolled over at the beginning of the year. This gap here is from when they recalculated the way that they were measuring Bitcoin dominance. And then here we've got December 2017. And this is where we went absolutely parabolic and we went straight up for the month. So this has played out really well in 2017. Bitcoin dominance dropped. Bearing in mind, in 2017, there was only a couple of thousand. There was only a couple of thousand coins. In 2021, we came into the Bitcoin dominance went up in 2020. And then in 2021, we rolled over. And then we had the first peak in April 2021. And then what we see from here is we rolled over on the Bitcoin dominance because what was happening, all the money was going out of Bitcoin and it was going into altcoins. And we had that all-time high in April 2021. Round about May, the dominance started to taper off. Then from the all-time high in 2020, in April 2021, we literally went sideways and then we went up to have the all-time high. Now, Bitcoin's dominance didn't do that. Bitcoin's dominance ranged, and that was because the actual all-time high in November 2021 was driven by a lot of money, new money coming into the market, a lot of Bitcoins being taken off the exchanges. The Bitcoins that were left, they were more expensive to buy. And this, it shows here as well, the last part of the 2021 cycle was pretty much not made up or out of Bitcoin dominance rolling over, but other factors. Now, Bitcoin bottomed in November 2021. So round about November 2021, we entered into this channel, this upwards channel. So we went up into this upward channel, and bearing in mind, I'm zoomed right the way out. We went up into this upward channel. We had 2023, which was the recovery year in this channel. We had 2004, which was the halving year. We also had most of 2025 in this channel. And then it rolled over, and this is what we see all the time. Now, this dip here was only about 8 or 9%, so it wasn't very deep, if that makes sense. But we came out of the channel, and since then we've been going sideways. And the reason why we've been going sideways is because a lot of money now is going into stable coins. And again, we've spoken about stable coins on the channel. Stable coins first came out in 2014. However, they really picked up in the 2021-2022 bull run and bear market. So what tends to happen now with the ETFs, the stable coins, and 33 million other altcoins is when money gets taken out of the market in a bear market, it doesn't always go back into Bitcoin. It goes back into stable coins as well. And that's why stable coins dominance is rising as Bitcoin's dominance is going sideways. What other things was we going to look at? The pi cycle top, we were going to look at, the pi cycle bottom. So if I go back over to the Bitcoin chart and in the pi cycle bottom, we've got the pi cycle bottom. Now, the pi cycle bottom is literally two moving averages. It's the 111-day moving average. And when it crosses above the slower 400 and hang on, let me see. I should have it here. When it crosses below, sorry, it's 150-day EMA. When it crosses below the 471-day SMA, That signals the pi cycle bottom. Now, the idea is that after that, there's a lot of capitulation and all the rest of it. Now, pi cycle bottom has been quite accurate. We have spoken about the pi cycle top, where the pi cycle top has only been a couple of days off the actual top. The pi cycle bottom has been very accurate as well. Apart from this particular bottom here, if I put on the 200-week SMA as well, we came out of November 2021, the all-time high at 69,000 US dollars. We came right the way down. We hit the 200-week SMA, which historically we've always bounced off or very briefly dipped under. The pi cycle bottom was also hit, but we had the FTX collapse, which actually kept us underneath here for a lot longer. In 2022, the pi cycle top was off. It was off by 132 days. However, if we go back to 2018, the bear market of 2018, the pi cycle top was only off by 1 day. By 1 day, it was only off by 313 US dollars. If we go back even further, to 2015, which was the bear market low after the 2013 bull run, the pi cycle bottom was only 2 days off. It was only 13 US dollars off the actual bottom. So at the moment, the pi cycle top has not been hit. In fact, it seems like the pi cycle top is nowhere near getting hit, if that makes sense. Here we go. Because the two lines that need to cross are quite far away, if that makes sense. So it kind of seems like more than likely that we will hit the 200-week SMA before we go down into the pi cycle top. What else was I going to do? I think it was the where are you? The MVRV. The Z score. Okay. So the MVRV Z score basically is the realized value of Bitcoin compared to at what price the Bitcoin. It's an on-chain indicator. So it comes from the Bitcoin's blockchain, and it's not just price and it's not just external sources. It's about what's actually happening on blockchain activity, and it gives a more accurate picture on the behavior of the market. And it's more of an early warning sign. So holders, obviously, they buy Bitcoin at a lot of different prices and at different times. And some holders have held their coins for a long time, and some of them have recently bought them. Depending upon the price that people have bought Bitcoin, it will show, the MVRV will show how much profit or loss holders are actually in. So it compares the actual price of Bitcoin to the price that the coins were last moved. If the MVRV price is high, it normally means that a lot of people are in profit and they could be taking profits soon. If it's low, it means we're pretty much in a bear market. People are more than likely going to hold because they're not in profit. In fact, they might even be in loss. So generally, we're looking at this line here. We're looking at 6, and we're also looking at 1 or below 1, if that makes sense. Below 1. So we had obviously in 2011 was Bitcoin's first bull cycle. It was the first time Bitcoin hit $1. It was the first time it was in Forbes magazine. It was the first time that it was picked up by the media, and we had that run up. We had it go from $1 to like $32. We've covered this. We had the Mt. Gox hack, and that's obviously why it turned over and it went back down. A lot of people were at loss towards the end of 2011, Bitcoin's first bull run. We've got 2013. In 2013, we had Bitcoin's first first bull market after the halving, if that makes sense. So we had Bitcoin's first bull market after the halving. We went up, and then obviously we had Mt. Gox, who had we had an issue with Mt. Gox, but as we can see, the MRV did trigger in late 2013, November 2013. Again, the MRV did trigger. That's when we had a lot of people from China come in to Bitcoin, and then we obviously had the China FUD, which led us down into the bear market. Moving forwards, the MVRV shows, it should show it, yep, 2025, when the bear market actually hit, when it was at its worst, the winter that it had here. A lot of people were in loss, so they were holding, and it kind of goes with this line here as well. We've got the 200-week SMA as well, which it bounced off. If we go forward, we can see here again towards the end of the bull run in 2017, we had the MVRV. I do apologize. MVRV again. It started to signal. Bearing in mind, it doesn't signal the exact top. It signals where people are in a lot of profits. It was triggered in November to December 2017, which is the exact peak. Again, it fell below zero. It fell below zero during the bear market. If we go forward, again, we've got it here as well. In 2021, we've got the peak, and then in 2022, a lot of people were underwater with how much Bitcoin they had bought. Now, this is one of the indicators that has not been triggered in this bull run, but we can see that we're quite close to zero. So that kind of means that tells you we are in a bear market. However, we're still not at the bear market lows. So that's me done. That's where we are in the market right now. I personally do think we are heavily in a bear market. I do think we're going to go a lot lower. What about you, Bill? What do you think?
Well, it's really hard. It's really hard to argue with that TA package, but I'll tell you what I think anyway. I think this is a very deep, ugly correction. In other words, crypto will have these pumps, and then the entire ecosystem vaporizes and goes into winter. That includes Bitcoin. I'm on the wrong end of all this up until this war started, right? That view was probably stupid. And I was getting close to saying, you know what? We'll see in October. Because that's what the 4-year cycle guys are saying, right? It's going lower.
Mhm.
It's going to 30K. It's gonna go to 30 or 40K and then just sit there while everybody just liquidates the ETF tourists leave max pain, right? And we're probably not at max pain. We weren't, I don't think. Now, with this war, you could have a stock market calamity, which could trigger the down move and winter. It's completely reasonable. My view is we're going to be policing the Strait of Hormuz for a long time. And this is going to cost more money than you can even imagine. The size of the force that we have over there, I don't know how they're going to pay for this without printing. Matter of fact, I think it's Powell's going to cut rates at the end of the month. Powell's a deep state guy. Powell will cut rates at the end of the month if oil goes to 100 because it's a tightening force. So my hope is that March is this like choppy range. Now, I know you have that one chart where it shows that if it is a choppy range, it just waterfalls off a cliff, and that's true. Every time Bitcoin sits still. My hope is that the floor is 58, is your 200-week simple moving average. If there's a panic, if that's also the 62% retracement of the Bitcoin ETF bull market. That's what I call it, from 16 to 126. So it's a 62% retracement, basically, which is normal in crypto across the board. It's really the only, it's the best thing I got going. Like any decent crypto will go up and then retrace 62% before it really goes. And I think that's what's happening. We're just going to retrace 2/3, wash out everybody we can wash out. This whole thing is player versus player at this point. The shorts have got complete control of the market. And then they're going to have to turn a printer on. Arthur Hayes has written a couple articles about this. And I think it happens sooner rather than later. And if it doesn't, the 4-year cycle guys are right, and we'll do it all at 30K. I think we're going to do it. I think we're going to see the Fed a lot sooner now. A lot sooner. So that's my, I have a couple of charts, but I don't have anything like you do.
Do you want to share them?
Yeah. I'm going to show this one.
So Peace, after the bear market, we normally have a recovery year. We kind of go sideways and start to go up. And then we have the halving year, a bull cycle year, and then a bear market again. Because in the bull cycle, a lot of money comes in. 1 second. I'll just get rid of that.
Okay. So with this is just Bitcoin monthly, using like just Tom DeMark stuff, but I'm not even really using that. I mean, one of the things that you can see is, this is 2017 all the way up, all the way down. This is 2021 all the way up, all the way down. Okay. And here we are again. Now, in technical analysis, things happen in threes. So it's illogical for people to think all the way up, all the way down, right? Like 26K or something like that. That's where the whole Bitcoin ETF bull market started. Okay. I like this level at 58. It's actually where the 2021 bear market accelerated from after the second top. So right here is 59. Okay. Just underneath that is 58. There's also one of my quantitative moving averages. So it's not a 200-day or a 50-day. It's just created using Tom DeMark's math. So there's a lot of stuff going on around 58. And obviously with this geopolitical situation, you would be a moron not to think it can't go below 60 on some event, right? But I think it's a 62% retracement, right? That's the number here. That's 58. Now, at a macro level, I did some research, right? And I'm like, okay, look at Bitcoin now. And what market, any market, does Bitcoin currently remind you of? And I was in third grade at the time, so I wasn't around for this. But this was gold in the 70s. All right. So in the this candlestick chart. So there was inflation in the United States because of the Vietnam War. Now we printed for that. Gold went from 37 to 187 in, I don't know, 3 years, 2 years. So 2 or 3 year bull market, followed by gold losing half of its value. So gold went from 195 to 102. and then went absolutely bananas parabolic. Then it went to 800 on the second wave of inflation. Now, in this case, here's Bitcoin over the last 3 years, right? So naturally, you get the big Bitcoin move up. And of course, unlike gold, which remember was a commodity in the 70s, you had a much more emotional move up in Bitcoin, and you had a much more deep, nasty correction. The gold correction took a long time. It took years because Bitcoin had to, because in crypto, we have to have our excess. And then they just purge everybody. Crypto has lost 50%. Bitcoin has lost roughly half of its value. It's down 53%. Now, could this get worse? Sure. Could this be the pattern match? And could you have another year of crypto Princess from her charts? Yup, you sure could. You can use this to justify your view. For sure. This is very subjective. However, if there's one more down month here, right? If, we're going to have an uncertain March, and then the reality that's going to set in is that we're not leaving over there. We wanted oil higher for whatever reason, maybe to incentivize solar power for Elon. Nothing is what it seems. My co-host says that, and that is a motto in the intelligence business, regardless of what we're actually doing over there, as in the United States, because it doesn't really make any sense if you look at it. Whatever it is we're doing, it's going to bring in lower rates and printed money. And whether it creates another wave of actual inflation or whether the equivalent parabolic that comes is because they just have to monetize the debt. How can you, like, the fact that they had to roll over trillions? Yeah, it's a big deal, but now it's a bigger deal. Now everything is a bigger deal. So how can you have, here's the list. How can you have AI models with the ability to upend any business model? So you have no idea what a stock's worth. And even if you're going to tell me that that's not a problem, the company is probably sensitive to oil or materials. Who isn't sensitive to $100 oil? So you don't know what stocks are worth. And I don't know, we talked about this on multiple shows. US bonds and Japanese bonds have done nothing but go down since this started. Government bonds are garbage. Normally you buy government bonds for safety. Not so. Not so. So could Wall Street portfolio managers, because all those guys in London, could they jump in one of those fantastic black cabs and head on over to the office on Sunday night and go, what are we going to buy? We know what we're going to sell, stocks and bonds. What are we going to buy? The answer could be the Bitcoin ETF if it doesn't fall apart and go to zero. Like if we're sitting here at the end of March, like we don't know whose charts are right. We don't know if, your chart that shows 40K and a final collapse is going to happen. We don't know. I think if it doesn't happen this month, it may not happen. Just be straight. So portfolio managers are going to have to make a decision. Do we want to be in NASDAQ? Do we want to be in all this highly speculative stuff with AI and oil risk? Or do we want to be in Bitcoin? Do we want to be in crypto in some fashion? Because just to put a footnote on it, gold and silver collapsed. Gold didn't collapse, but silver did. Mm-hmm. Mm-hmm. Silver went down back to back. Silver just got smashed, right? And that's because we're moving. I think we're moving from fear to liquidity. People are looking at this and going, okay, the fear trade is moving to oil. And the next trade is liquidity. And this has been all over Instagram, and it's tough to listen to because they're all annoying. They're all the little Instagram influencers are like, oh, liquidity. They don't really know what that means. they're going to know what that means if Powell comes out and says, because he's said these things before, that oil at 100 is a tightening force. It's inflationary, but it's a tightening force too. You can't. I mean, what are English and U.S. middle to low end consumers going to do if their gas bill doubles? Right. So, I mean, if this, and again, and if it doesn't bring them in, and if Powell is stubborn, we'll forget it. Then you're going to be right. Then it's going to go to 40. That's it. If the Fed does not respond to this, especially if it continues, this lights out for all risk assets. I could be honest. Like, I don't think you can do the job that I do and not have humility, like not have respect for like the kind of work that you did. There's almost no argument with that work, really, from a TA point of view. Nobody's going to, well, I have a much better chart. No, you don't. No, you don't. But it's this idea that, this geopolitical situation has changed. And when silver was supposed to go up and it didn't, it went down. In this case, Bitcoin should have gone down, but it didn't yet. So I don't want to be long-winded, but that's kind of like the overview.
So you're thinking we're going to, because in the past, that's what we've done. That's what we've done in 2000. So we had the first bull run in 2000, or the first bull run after the halving in 2013. 2015 was actually the bottom of that bull run. And that's where we hit and we bounced off the 200-week SMA. Come 2017, Bitcoin's second bull run after a halving. Again, 2018 was the bottom, and we did exactly the same thing. We actually bounced off the 200-week SMA. 2022 was slightly different. We had the pi cycle top here. We had the price hit the 200-week moving average, but it went down below. In fact, I'll quickly just share my screen again. One moment, let me just get rid of that. But the overlay and this. So if we're just looking, can you see? Yeah, you can. So again, we had the 200-week moving average here, but we actually went down below it, and we bottomed around here in November, some point at 15,000. Whenever round about here, 15,000 US dollars, round about here. So that's what you think. Is that what you think before I go on?
Yeah, I think you could see the 200-week simple moving average. Like, I think that's the floor under the market.
Okay, so with me personally, when I lived through the 2022 bull run, we had a lot of black swan events. Now, I know you've been in the market for a lot longer, but we had FTX, we had Celsius, we had Luna, we had 3 Hours Capital, we had Voyager, and more. These are just the ones that I know I can remember off the top of my head. We haven't yet seen that. What we've had this cycle is we've had a lot of institutions come in, a lot of companies put Bitcoin onto their balance sheets, but we haven't had these black swan events yet. Are you not expecting we're going to have a lot more black swan events before we bottom?
Okay, I think we are going to have black swan events. I just think they're going to be in legacy. In other words, in crypto, what we've had is stupidity, like the Bitcoin treasury companies. That's been our Bored Ape Yacht Club of this cycle. Right. But if you look at this thing, I'm trying to share, right? This blue owl, like what's going on, like this was happening before we went into Iran. This is a fund that makes risky loans called private credit. This fund, people are trying to get their money out. Yeah, they're not getting their money out because it's insolvent. If you've ever wondered why Legacy wants to tokenize assets, it's because there are so many assets and so many trading products inside Legacy that it just freezes and you can't get liquidity. For all they make fun of crypto, crypto doesn't close. Right? This is dated February 19th. The original announcement about this huge fund was in January, and this is ongoing. There was a headline about this 2 or 3 days ago. So this thing about, like say people walking away from credit cards and problems with banks, and then you bring in Anthropic and this, threat to IBM, the software stock crash. Like you could argue what has happened to software in general is a black swan. Software is going away. The industry is going away. And we talked about this last week. Who's next? Oh, well, don't worry. There are safe stocks. Remember that? Okay. Sure thing, bud. Sure thing. Nothing is safe from AI. And if it is, supposedly, it's at risk from oil. So the black swan feels like it is AI. People know about AI, but they don't understand how rapidly it can reorganize and change business models because no one's seen this before. You've seen it in what? Movies. Like, I don't know, these movies like, your dad or your older brother would watch, Terminator, Matrix.
I love
what I'm saying? Right? So
Yeah.
it's like, these movies in some ways are actually happening. They're actually happening. I mean, Skynet, the computer from the Terminator movie, that goes all wrong when Skynet is plugged into the Defense Department. Today, some kind of deal was struck because one of the AI startups wouldn't let Uncle Sam, I don't know, take everyone's data. Who knows? OpenAI stepped in and goes, oh, you know what? We need financing. You can take our models and do whatever you want. Like the headline is right here. This is how Skynet started in that movie. I mean, the headline, OpenAI rewrites Pentagon deal. They're going to plug this thing into the Pentagon. Okay. So, all right. Is that silly? Maybe. But I think the black swan is that people are minimizing something that could be huge. The same way in crypto, they minimized all of this lending, like the Celsius and all of this use, like Luna, the use of crypto as collateral, assuming that crypto couldn't collapse. So now let's do the counterpoint. The black swan in crypto is essentially the failure of the Bitcoin ETF. In other words, what would happen if everybody who owned the Bitcoin ETF basically had to sell? This is retail and institutions. Like when people talk about 40K, how do you get there? How does that happen? Well, it's easy. All the ETF tourists sell. They just hit the sell button, and BlackRock has to go to Coinbase and just start liquidating in the open market. The failure of the Bitcoin ETF would be the crypto black swan. How likely is that? I don't know. I mean, if you were going to tell me in October that Bitcoin was going to turn around and, these 4-year cycle characters were all going to be right, I would have told you no. But, the 4-year cycle guys are in vacation in Tahiti and we're sitting here sweating it out. I think the black swan is clearly in Legacy. And I think that if there is a black swan or a threat of a black swan, because I mean, I can see it, you can see it, we can all see it, the Fed can see it, BlackRock can see it. They're going to pick up the phone and print way before that happens. They're going to preempt the black swan. They're not going to let this turn into a disaster. That's because if it does, I don't know if they can stop it. I don't know if they can stop it. That's been my theory. Again, me and my theories.
Yeah. But historically as well, we have normally had bear markets that have lasted about a year. So arguably the 2013 bear market lasted more than that. It lasted a bit more than a year. When we look at the 2017 bear market, the all-time high was in December. December of 2017. The bear market was in December 2018, the bottom of the bear market. In 2021, the all-time high was in November 2021. The bear market again was until November 2021. Do you not see the pattern?
Oh, sure. Oh, absolutely. Listen, if you were out there in crypto and you saw the charts that you just showed and you wanted to go, I'll see you in October. You guys have fun with the Strait of Hormuz. I'm out later. I wouldn't blame you. Now, would I sell all my Bitcoin? Would I sell everything? No, because timing the market is less important. It's more important to have time in the market because you don't know. Is it turnaround tomorrow? Is it October? Is it next April? You don't know. So you got to stay with something. You stay with something, but there's no point in being aggressively long. My old boss at Goldman used to say, buy breakouts. There's no breakout here. There's no uptrend. There's nothing. We get these little rallies and then they just sort of fizzle and go sideways. And it's like your chart. It's like, theoretically, it's an accident going someplace to happen. So you just buy a breakout. If the breakout's October, I don't think anybody's going to complain. And it's going to be, that sets up a fun 6 months. I don't know. What are we going to be talking about? The latest hairstyles in London. You know what I'm saying? Like it sets us up a very interesting content environment. All right. But conceivably, yeah, a year. This gold bear market was 2 years that I just showed. In my opinion, crypto moves so much faster than a commodity market in the 70s. I mean, just think about the car your parents drove you around in. What kind of car is that versus a new car today? That's kind of how you have to look at markets. Like, my mom drove us around in the 70s in this like big, like lime green station wagon from Chevy. It was the funniest looking thing from the 70s. And I remember the 70s. It was miserable. We were waiting in line for gas from the Iran oil embargo in February. We're sitting in a car in line with the engine off. And I'm going, Mom, why are we freezing our butts off? She's like, well, it's complicated. It's so funny how the whole idea of the 70s is back again. I'm not in a green station wagon, but we're sitting around going, oh my God. It's like waiting for crypto is the same as waiting for gas in the 70s. It's like, are we there yet? And Army Piper is like, no, Bill, we're not. I'm on vacation and so should you be. You know what I'm saying? Like, go on vacation. It's not unreasonable.
Yeah. I mean, like for me, this bull market and bear market is slightly different, especially the bull market. We didn't top on Euphoria. We didn't get that hype. We didn't get people coming in, if that makes sense. We didn't get retail coming right in. How do you think that has changed? It was apathy. It's called apathy. We've topped on apathy rather than euphoria. And I think that's caught a lot of people off. How do you think that's going to change the bear market? Because again, we don't have retail in. We don't have the mass amount of people that we normally have in. We don't have that this time round.
Okay, well, the normal crypto price action is, literally everybody in, euphoria, everyone out, winter. you know, and everybody round trips everything 90%, including Bitcoin. I think when you top on apathy, you're looking at something that kind of behaves like a stock. What we ran into was distribution. We ran into whales and miners going, you know what? At 120K, I'm a billionaire. I got to sell. Miners diversified into AI. They're like, you know what? We're going to sell Bitcoin. We're going to build out some AI stuff. We'll get revenue, and then we won't have to sell Bitcoin in the future. So they distributed the Bitcoin from the hodlers and the miners to Michael Saylor and treasury companies. And some of those people will get liquidated, just like any other margin call in stocks. It'll retrace 62%. And then it has a shot at resuming. Because, you know, the flip side, the thing I like about my argument is you're going to know if you're right very quickly. Because if it breaks out, you're going to have about 10 minutes to buy it because everybody is short and underinvested. So you can wait. Of course, you're going to wait, right? There's nothing good is happening. But the moment that people realize, I don't want Skynet, I want a decentralized future, right? And people are going to say, wait a minute, maybe this is a correction. Like, isn't it funny how everybody, like, say a year ago, will go to a Bitcoin conference and Michael Saylor will get up and say, it's going to 750K. And everybody will be like, yay. And everybody thinks that's going to happen. Well, how do you get to 750K? You have to get everyone out first. Now, your level to get everyone out is 40 or 30. My level to get everyone out is 58. I think people are too scared of Bitcoin. I think, but if you look at it, I mean, Bitcoin is only down today, March 3rd. Silver's down 6%. Bitcoin is down 1%, 67K. Like nothing is happening. Boring, yes, but you know, you got a major war going on now. Don't kid yourself. Even if it's theater, they're shutting oil facilities down. This is a major war. Trade's okay. Right? And the moment that people realize that they're underinvested and the only thing that AI can't copy, that's the other thing, right? There are certain common sense things. I mean, Bitcoin, every time you have cryptocurrency, it's essentially theoretical garbage in all these last cycles, right? Bitcoin traded on promise, a promise of the future until BlackRock said, yeah, we're putting it inside an ETF. That then all these stories that were in the Bitcoin standard and all these things that the maxis have been talking about actually started happening versus hype up and then rug. So, you know, if they destroy the Bitcoin ETF, tourists will have 40K. If they don't, it's a correction. And you didn't correct. You did correct on apathy. You did top on apathy, but you really topped on distribution. So many sellers came in all at once that there just weren't enough buyers at 120K. You had 50 billion invested in the ETF, and Michael Saylor had bought all he could buy. There was no marginal buyer at 120. Now, if the American people see what's going on in the Middle East, you know, you got to start questioning who's running the United States. This is unpleasant, but you have to look at it. Who exactly is in charge? Who is running the show, and why are we doing these things? And if the average American doesn't understand why these things are happening, and they go to get there were already lines for gasoline in Texas this morning. It took everybody like 48 hours to get it. There were already lines to get gas. What's going to happen if gas at the pump doubles? People are not going to have any problem understanding that we need a different currency. And gold and silver have done its thing. So what's it going to take? I don't know. How about $150 oil and a realization that, I don't know. They're saying the quiet part out loud, and that the governments are going to do what they're going to do, and they don't care what you think. You can vote for whatever you want. It's the same thing. Now, we don't need to go deep down that rabbit hole, but my co-host tells a story. Like, if you walked into a bar 3 years ago and tried to, or 4 years ago before 2020, and tried to talk to people about Bitcoin, they might have looked at you like, what is she talking about? Now, even though it's a bear market, if you walk in and talk to somebody about Bitcoin, they go, oh yeah, I know what that is. Yeah, that's different money. Or they might say it's funny money. You know, your parents might, but most people are like, yeah, I think I've heard of that. Yeah, that's okay. Before it was just like, oh my God, what's wrong with you? And they would just turn away from you like you were like, I don't know, you were a pirate or an idiot. It's not that way anymore, right? You know, psychology, just like Anthropic and Python and IBM, these things can churn on a dime. So it's winter until, I don't know, until we get a flower popping out of the snow. So I get it. It's not a pretty picture, especially since you can have an event like my concern about this geopolitical situation is what can happen on Sunday nights, US time, Asia open, right? Wall Street sits and looks at this all week. They close the market on Friday. We all know the US government, all these geopolitical actors want to do things when stock markets are closed. So everybody launches on Friday, and then you wake up to $100 and something oil Monday morning, and then that's when the real action in the market starts. You know, that's your big risk point.
I think going forward, these live streams are going to get so interesting because I am such a bear. I'm not even going to lie.
I know. I know. There's no arguing. Like you showed me some of these charts last week, and I was like, "It's over. That's over. It's over." It's just like pack it up. The only reason I have something to say this week, really, is because of this geopolitical situation. But then again, you know, that could be the catalyst for the type of stuff you're talking about. Right. Crypto Princess's methodology translated into New Jersey American language is the market is going down until Bill sells. The market is going down until every YouTuber just goes off the air. It's over. It's just absolutely, because that's what happened. That's what happened in 2018. That's what happened in 2015. It was just like, it didn't numerically go to zero, but spiritually it went to zero.
And we've seen that already. We've seen the numbers on the fear and greed index go down to 4, go down to 5, which is the lowest that it's ever been. But we're still, as far as I'm aware, as far as I believe, and what I try to do is pattern read. Obviously, the markets don't repeat, but they rhyme. So I like to pattern read, and I don't think we're actually anywhere near the bottom. So moving forward, it's actually going to be really interesting, these live streams, because I'm so much more bearish than you. So we'll find out. In hindsight, we'll know who was right, who was wrong.
We'll know. Crypto Princess, you know, she has her bid down at zero. I get it. There's no, listen, until this thing breaks out. I mean, what if you want to be bearish? Like, what are we getting out of this market on the upside? One day at a time. You get 1 day. You know, Army Piper comes running off the beach into the house to sell, and he goes right back to the beach. Just goes right back down again. Shorts don't have to cover it. They don't. They're not going to get, I mean, you would have to see Bitcoin above 75, headed for 85 in order to really get a breakout. You would have to push out the shorts. You can't push the shorts out. You can't. They're just too comfortable. Like I saw you going into one of the chats and being like, stop being bullish, Moon Boy. Stop it. You can do that because it doesn't go up. It just doesn't go up. I think the only case that I can make is not to get all the way out of the market.
Oh yes, definitely. That's very important.
You know, don't dump. I mean, obviously don't have the rent money sitting in some altcoin, but You know,
I think a lot of people made that mistake actually during the last bull run. I think we over leveraged. We went straight into this bull market, and it didn't play out actually, especially with the altcoins. And I think that's probably because there's just too many of them. 33 million now, if not more.
yeah, I see. You know, like, yeah, I mean, people had last cycle's bags. People assumed. Look, the reason it's a bear market is because people assumed that this was going to be just like 2021. All you had to do was buy 15 cryptos and sit there. That's it. And everything was just going to 10x magically. People not realizing that the reason that happened was because they printed global central banks printed 14 trillion in March of 2020. That's not going to happen again. And if it does, well, it'll be because of a legacy black swan. So something really happens where the Fed has to, all these central banks have to be like, you know, there has to be a liquidity repeat for that to happen. And even if the market does go up, I still think it's going to be very selective, right? Like, let's just say it turned around tomorrow. Okay, well, not every coin is going up. Right. Not even if you're right. I mean, oh my God, if you're right and it goes to 40, you're not going to have 33 coins. Never mind 33 million. This thing goes to 40. Oh my God. You're going to wipe out half the top 300 easily. I mean, do you at Bitcoin 30 or 40K? What, like, do you need Cardano? I'll be bearish. Like at 40K. It's the game we can play on the stream is, let me see. At 30K Bitcoin, do you need Stellar? Do you need Litecoin? Do you need World Liberty?
Oh gosh.
World Liberty's 34 on the market cap chart. You know, let me see what just have a laugh. Do you need Pepe? Pepe's 55. Ethereum Classic. How about that?
Oh gosh. I mean, that can just go. I don't even.
I mean,
that ideology for Ethereum Classic. I mean, those people are just dying out. Anyway, that's the end of the live stream. It went so fast today. This Thursday, we've got a crypto story dropping from Jen, who's done a lot of work in the crypto community. And me and Bill will be back next week on Tuesday, same time. And we'll see you all then. Thank you so much for joining us.